Can you explain the unicorn setup quickly? Yeah, so the unicorn is just simply a breaker block plus an FVG. Okay, so here's a long setup right here. Let's get rid of this arrow. Here's a long setup right here. The breaker block will always be found in between these two swing points, and I want to see an FVG aligned with it. So just in the most simplest terms, it is just a breaker block plus an FVG. Okay, so this is what I look for during New York Open. Okay. Now, to add to that, right, I don't want to have a huge checklist. I just want one or two things to go with this to understand what I'm doing. That is SMT, right? So I look for this during New York Open, and when I'm looking for this, I want to see a higher time frame SMT supporting this idea. Okay? So just take a quick screenshot of this, and now we're going to also do this in price action because we need to read the candlesticks as well, right? This is a long position. Okay. I enter at the beginning of the breaker with a stop at the low, aiming for 2R. Okay. Breaker block plus FEG at New York Open with SMT supporting the idea. That's what I'm doing day to day. Entering at the beginning of the breaker, stop at the low. All right, so take a screenshot of that first, and then we'll show real-time examples, right? All right, you got some time to do that. Now let's go over to price action. Ready? 15-minute chart. Bullish FEG, right? This is a higher time frame level to be looking for long positions. Notice the time. Right? Once again, it's going to sound repetitive because it's the same exact thing over and over and over again. At New York Open, look for the unicorn model that has SMT supporting the idea. All right, let's take a look. This is 9:30, so New York Open. At New York Open, ES does not take out the CPI candle low. At New York Open, NQ does take out the CPI candle low. There is your bullish SMT that I referred to. There is the time that I referred to, New York Open. Now, we understand that during SMT, you want to long the stronger pair, short the weaker pair. So this example right here shows that ES is the stronger pair because NQ took out the low. Since NQ took out the low, ES did not take out the low. ES is the stronger pair. All right, so then we go into New York Open looking for a bullish breaker with an FEG, and you can see it right here. Swing low, swing high, new low, new high. This would be your bullish breaker. You need to have an FEG aligning with it to make it a unicorn, right? Here's your FEG right here. And like I said, you enter at the beginning of the breaker, stop at the low, aiming for 2R. Right? Who remembers the Tuesday morning live stream? Who remembers the long position that we pointed out Tuesday morning? Well, here it is. Here's the model that I'm talking about. You have New York Open, you have bullish SMT, you have a bullish unicorn. All right, so this would be a long entry. All right, let's just go ahead. This is replay mode. Understand that this is replay mode, okay? This is not a live trade. This is replay mode. Somebody asked me what my model is. I'm showing you what my model is. That's why I can't show you currently because my model is not currently on the screen. So we went back to replay mode. Okay? Understand that this is replay mode. But this would be a long position right here. Stop at the low. TP at 2R. See what happens. And there you have it. Now, this begs a lot of questions. All right. First question I have for you is, do you have the patience to hold this thing to target? Let's take a look. This is 10 o'clock. This is 12:55. Honestly, chat, throw it in there. Throw it in chat if you truly think that you have enough patience to hold a position for more than 2 hours. Yes or no? Or during all of these price fluctuations, right? So, for example, right here, right? The beginning of the position goes really well because after the entry, you go right into profit. But the moment you go into profit, are you going to be the individual that raises your stop loss into somewhere above break even because you don't want to allow this thing to become red again? Right? Are you going to be the individual to get stopped out here right near break even? Or are you going to be the individual to be able to control your emotions, control your thoughts, control your actions to allow all of this to occur? Honestly, yes or no? Can you hold a position for more than 2 hours? Or are you going to allow your emotions to deter you from that? Why did you long ES in this example and not NQ? Go ahead, chat, throw it in there before I just hand it out. Why are we looking at ES in this example and not NQ? Very good job, chat. Very good job. Bullish SMT. You long the stronger pair, you short the weaker pair. So in the beginning of this example, let's go back. We pointed to this right here. Right, so SMT is when two correlated assets are doing something different at the same point in time. Right, so take a look at this right here. ES did not take out the CPI candle low. NQ did take out the CPI candle low. This shows bullish SMT. This shows that ES is the stronger pair. You long the stronger pair, you short the weaker pair. So let's just do a quick example of that. Okay. Bullish SMT is when you're analyzing the lows. The stronger pair would be the pair that creates the failure swing. So this one is the stronger pair. Right? So long the stronger pair, short the weaker pair. All right. Now let's look at bearish SMT. When you're analyzing bearish SMT, you're analyzing the highs, and it's used the same exact way. When two correlated assets do something different at the same time, the asset that creates the failure swing is the weaker pair. So you want to long the stronger pair, short the weaker pair. All right. So that would be why I chose ES in that example versus NQ. All right. Very good question. You size your stop for volatility. In my opinion, the market determines the entry. The market determines the stop. Okay. So what I'm trying to say is my entry function is a breaker block plus an FEG. I look to enter at the beginning of the breaker. Right here. I enter at the beginning of the breaker. I put the stop at the low. When I say the market determines the entry, the market determines the stop, what I'm trying to say is sometimes you'll have this much risk, right? Sometimes the breaker will be really small, right? So look at the difference of this risk, 20 points versus 8 points. You don't get to determine that. The market does. Sometimes when the market has more volatility, you'll have larger risk. Sometimes it'll look like this. But what didn't change is that you're entering at the beginning of the breaker and the stop is at the low. So the market determines the entry, the market determines the stop. What you do as a risk manager is you determine your size, right? Because obviously, one contract at 22 points on ES is a lot more risk than one contract at 7 points of ES. You see the difference there? So you change your size, right? So do the calculation beforehand to make sure you're sizing appropriately. And it's very simple, right? We have ES here, right? And if 22 points is too much of risk for one contract of ES, right? Just go down to the micros so that you can size appropriately, right? Just because the stop is larger, that does not mean you should take on more risk, right? In my opinion, you should divide your drawdown by 10, right? So if you have $4,000 of drawdown, right, having $400 of risk on any given trade makes sense, in my opinion. That's what I do for myself.